Hello, friends, welcome back. And yeah, as always, my first, I would like to thank everyone. The day by day, the audience response is increasing, and I would really thank you all for all the love and support you are showing me. And that's what motivating, or you can say, driving me to come up with interesting topics like which are the best stocks to invest for the long term and what are the different financial aspects you need to consider early 20s or 25s. So as promised in my previous video, I will be coming with one more interesting stock that is good for the long term. So today I'm back. Yeah. So which stock I'm talking about today? So whether it is from the IT or the pharma or from the financial, because you often see me talking about these stocks, but today I'm back with one more interesting stock that is not from these three sectors. I am talking about one of the leading truck manufacturer in the India. That is Ashok Leyland. So why Ashok Leyland? So today we will be, studying why Ashok Leyland, because um, as I already mentioned you, it is one of the leading, second largest truck manufacturer in India, and the third biggest bus manufacturer in the world, and the 10th biggest truck manufacturer in the world. So let's see, and Ashok Leyland analytics about the business and financials. So I will be starting with first chart, which explains about year to year sales. This is not the sales about how much money it made. It is about the number of vehicles the Ashok Leyland has sold from year to year. So in November 2019, it sold almost 10,175 vehicles, where you can notice there was no pandemic. But in 2020, even in the pandemic, they made sure they sold 4.75% higher than the last year, that is 10,659 vehicles. So this shows Ashok Leyland is in a good path, which shows their strategic partnership uh, partnership with the different companies, because they have expanded. Next I will be talking about where all they have expanded their business. So the first number indicates the sales, domestic sales. The second, this number indicates outstanding shares. So you can see the current outstanding shares of Ashok Leyland is uh, 293 crore 55 lakh 27,276. It is really huge, not because of its price. You can say the current price is very less. So I am following, or you can say I don't say, at what price I have entered, but I am following it from 160, and it has been, dropped from 160 to almost 38 rupees. Current, once again, it is back to its stream 195.96, and I would say even the current price is good to enter. So I was talking about the global presence. So currently they are working in UAE, Saudi Arabia, Kuwait, and even the Russian part, and also the South Africa part. African continent. So that is what driving Ashok Leyland in current months. From 2 to 3 months, you can watch that there is an increased price movement in the Ashok Leyland after announcing their recent sales growth. That is the recent quarter September sales growth and profit growth. And the next I will be talking about the financial. This comes under what all the strategic move Ashok Leyland is doing. But now we will be talking about the financials. So annual sales growth from 2017 to 2019 March, you can see there is from 22,870 crore to 33,196 crore. That is really good growth, right? Almost in 3 years they have increased their sales from almost 11,000 crores. But you can see there is a steep drop back to 21,000. Why? Because the government made a transition from BS4 to BS6. Okay, so at that time people were in dilemma whether to, why we should buy BS4 vehicles. Within 2 to 3 months, we are going to get new editions, that is BS6. So because that was the only reason, and it is not with the only Ashok Leyland. Almost every automobile manufacturer saw a deep drop in their sales, but Ashok Leyland still managed good numbers. That is 22,000 vehicles. Even in this pressure is not a joke. So sales, when it comes to annual sales growth, Ashok Leyland is doing good. But the next thing is interest. So yeah, everyone know that manufacturing company run with huge debt, and because of which even Ashok Leyland is seeing some pressure in their debt management. The interest is increasing continuously from 1,502 crore to 1,801 crore. So this is the negative point I would say for the Ashok Leyland, but still they are under control. When you compare with other competitors, the debt is under control in Ashok Leyland. Next is the profit. Sales got affected, obviously profit will be affected, but there is an steep fall in the profit because though there was no sales, but controlling over the operating expenditure is really difficult, especially in manufacturing companies. So the profit was saw a steep fall from 2000 crore to 456 crore. The best part I would say, cash flow from the operating activities. Forget about having 1,000 crore of operating cash flow from operating activities in manufacturing countries companies. Having a positive is really a big achievement. And look at Ashok Leyland from minus 3,745 crores to 383 crores. I would say Ashok Leyland is doing tremendously well in terms of cash flow from the operating activities compared to its competitors. So, one more positive point. Gross profit margin is growing from 15.17 to 15.22. There is little improvement, but there is a growth. But there is a steep fall in their net profit margin. One should have concern of net profit margin. It is almost 4 to 5% drop. I'm sure since BS6 vehicles saw a very good growth, many people are really opting for Ashok Leyland vehicles because of their strategic merge with the local parties in India and even in the abroad. ROCE has saw a growth from 4.82, that is return on capital employed, a growth of 17.52 to 18.32, but once again drop because of the same BS6, BS4 to BS6. Debt to equity I have already explained you here. The interest is increasing, obviously that will be reflected in your debt to equity. So the debt is increasing from 1.73 to 2.07, but still it is under control. Okay. Next I will be talking about P. The P you can see, it's a self-explanatory. Price to earning ratio should be less. So from 45.25 to 12.9, which shows that the price to the earning, the price is increasing, even the earning per share is also increasing, because of which the PE has been reduced. That is really good. And even this is the evaluation ratio of EV by EBITDA and price to sales. So as I have already mentioned, along with PE, even EV by EBITDA should reduce. And you can see from 2016 to 2020, the EV by EBITDA also reduced, and price to sales should be always less than 1. Many people consider price to sales is also an important point to enter and exit. As long as it is less than 1, it is good, which indicates the price to sales. The sales is more than the price, which means the current stock is undervalued, and once it crosses 1, it indicates that it is moving to away from its intrinsic value, and they make sure they exist from the stock. So you can see from year to year they are continuously doing good in price to sales also. So Ashok Leyland has got quite good evaluation ratios and financial background, and it's a and as I mentioned, this is the best company to invest in even at the current market price. Hope you enjoyed the basic fundamental analysis of this stock, and I will be coming with more educational videos which would help you to understand how to evaluate the stock to be with the stock for the long term. And below I have mentioned some of the strengths and opportunities with this Ashok Leyland. If you want a detailed analysis, you can always ping me. Thank you. and I will be back with